Could I ask everyone to take their seats? As you can imagine, Commissioner Moscovici is on a bit of a tight schedule in the midst of saving Europe and the world. Welcome back to the Peterson Institute for International Economics. I'm Adam Posen, the president of the Institute, and standing next to me is our guest this morning. Just a brief initial introduction both for the Institute and for Commissioner Moscovici. For the Institute, we at Peterson are very proud to be, we think, and I think acknowledged to be, the center for serious economic discussion of European issues in Washington and I think in the U.S. And this comes by our set of experts, including people like Jacob Kierkegaard and Nicolas Véron, and now Olivier Blanchard, of course. But it also comes from our ability to convene with officials both on and off the record from Europe for serious discussion and exchange. And we're delighted to have Commissioner Moscovici as the latest in a series of people doing that. In fact, for those of our supporters, stakeholders, and officials on our mailing list, you will find that today and tomorrow we have, I think, more European finance officials than anything but an ECOFIN meeting. But we are starting off with one of the best. Commissioner Pierre Moscovici is, of course, the European Commissioner for Economic and Financial Affairs, Taxation, and Customs. He's going to be talking to us today about the European economy, ongoing recovery, and policy challenges. Photographs. Before becoming commissioner in 2014, he, of course, served as Minister of Finance in France. This is after a long and distinguished career in both the French National Assembly and in the European Parliament, including as Vice President of the European Parliament from 2004 to 2007. He had previous cabinet experience and European experience as France's Minister for European Affairs from 1997 to 2002. And, of course, he is on the front lines right now as Europe emerges from economic crisis but faces perhaps more challenging issues on the political economy front. I am delighted to welcome Pierre to the Institute, and thank you very much.
Thank you, Adam. Thank you very much, dear Adam, ladies and gentlemen. I'm very pleased to join you today, and always honored to be here in the Peterson. And thank you for inviting me once again. Americans and Europeans like to compare their economic performances, and the IMF meetings here, the G20 meeting also, are a good opportunity to play this game, and more importantly to see a trend in the parallel evolution of our economy. So allow me to introduce our discussion, to share with you a few thoughts on these matters. There has been much talk these past few months of a two-speed recovery. The economic recovery in the U.S. is expected to continue at a robust pace, while in Europe it has been more subdued. Growth has been below 2% in the U.S. in only 1 year, since mid-2011, while the euro area and the EU as a whole have not yet reached this figure. My message today is quite simple. The European economy continues to recover, but at a pace that none of us in Europe can be satisfied with. We have a clear vision, I believe, of what we need to do to support growth, both in terms of macroeconomic policies and in terms of institutional design. So these are the matters I'm going to talk about. Let's first look at European economic situation today. It's not well known, but it's true. The European recovery is entering in its fourth year. GDP in the euro area grew by 1.5% last year, and I would say, although I saw the forecast of the IMF, we're going to deliver our own forecast beginning of May, that I expect a similar pace this year. So the recovery continues, but as I said, its pace remains subdued. It has been slower than in past recoveries and slower than in other advanced economies. And so When we enter these IMF meetings, I would say that Europe is obviously not a problem, which is a change. It's not going to be in the focus of the discussions. It is becoming an asset for the world economy, but it's not yet the driving engine of the recovery. Our recovery is being supported by several tailwinds that you know, such as low oil prices, a very accommodative monetary policy, which I consider really appropriate, and a relatively low euro exchange rate. We have no comment about that. We're going to discuss that in the meetings which will start now. But, well, it's also, I would say, quite favorable to our economy. However, the European economy is now also facing headwinds from the slowdown in emerging economies, the weakness of some advanced economies that we saw towards the end of last year, and weak global trade dynamics. Increased levels of global uncertainty and financial markets volatility represent for us, as for the world, additional challenges. If I enter into more detail, I would say first that domestic demand has been holding up well and is, of course, one of the main characteristics of this recovery. So far, Europe's recovery has been driven mainly by private consumption growth. Public consumption has recently surprised on the upside. Well, it's a paradox. I can say it here. I wouldn't say it in front of Madame Le Pen. But it's mainly driven by spending to accommodate asylum seekers, which is, from an economic point of view, obviously an opportunity as well to reduce some macroeconomic imbalances and also to contribute positively to growth through public finances. Over the past few years, the main source of concern has been and is still investment. Europe suffers from an investment gap, which is, of course, a problem for its present, but also for its future. Firms are still hesitant to invest, given the outlook for domestic and global growth. However, there are, for I would say the first year probably, good news. And the good news are that investment was stronger than expected during the second half of last year. And so we expect it to grow now at a stronger pace. This is a hopeful sign, but we will need to see if it is confirmed in 2016. Inflation remains very low, probably too low. Annual inflation was negative again in the last 2 months in the euro area, which is due as well to lower energy prices and negative base effects. Inflation is expected to remain at very, very low levels during the first half of 2016 and then to pick up gradually later this year. But you know that the target of the ECB is 2% inflation. I don't know when we will be there, and this is what also justifies the choices of the ECB. Unfortunately, the outlook for the near term has worsened. Overall, we now expect GDP growth in the first quarter of this year to have been positive, but a bit slower than expected. The Commission will publish, as I said, its spring forecast on May the 3rd. Beyond the short term, risks to the economic outlook remain large, and I'm obliged to say mainly to the downside. These risks reflect the tailwinds I already mentioned. In Europe, policy-related challenges on the management of migration flows and security issues, maybe we're going to discuss that in a few minutes, could also trigger developments that become impediments to investment and growth. So, to sum up, I would say that all this calls from some caution. It does not signal a more fundamental and lasting weakness, but it does mean that we must take still more determined action to boost growth. So, what should we do? In the short term, I would say that economic priorities should be pursued in parallel, and I would mention three of them. First and foremost, fiscal efforts by individual member states should contribute to a euro area fiscal stance that is growth supportive. As you know, after the crisis, we had to adapt our public finances in order to combat debt, and so the contribution of deficits to growth was, of course, recessive or negative. Now, if I see last year, the fiscal stance was neutral. It is becoming slightly, very slightly positive. A lot has already been done to ease monetary conditions and to attain that broadly neutral fiscal stance at the euro area level. A more differentiated fiscal policy response could place the recovery on a stronger footing. Obviously, this must take into account countries' respective positions vis-à-vis the requirements under the EU fiscal framework and their debt stabilization needs. The situation of, I would say, on the one hand, Germany, on the other hand, Spain or France is obviously not the same. More also needs to be done to foster convergence within the euro area and to tackle lasting cyclical divergences. In this respect, efforts to eliminate imbalances and to improve the adjustment capacity are very, very important in our mind. It goes without saying that not only should countries with the legacy of external indebtedness make efforts to restore competitiveness, but I would insist on the fact that also member states with large current account surpluses should prioritize measures to help channel excess savings towards the domestic economy. We have overall a huge external surplus, as you know, in Europe, and especially in some of Europe's most important economically countries. So that's the first priority, is about fiscal efforts and reducing imbalances. Second, we must absolutely restore investment to level where it will support recovery and contribute to long-term growth. We are making good progress in implementing the European Fund for Strategic Investments, the EFSI, our EU investment plan, the so-called Juncker plan of 315 billion euros. The EFSI is now fully operational. So far, investments worth over 76 billion euros have been approved in 22 EU countries among 28, and probably there will be a project adopted in Greece in the days to come, so it will be 23 countries. So it's quite a strong pace and a good success for the investment plan. Further investment projects are in the pipeline and will multiply that figure over the coming months. But, of course, we are conscious that more needs to be done, that growth prospects will be improved substantially if a real recovery in investment is also achieved, and this is our main policy effort. Countries need to create the conditions for a smoother flow of credit to sectors that need it the most and could harness it to the most productive use. So favourable credit conditions can only be sustained if member states with large stock of private debt embark on a steady deleveraging path and implement measures to gradually reduce non-performing loans. This is obviously a very important problem for Europe, thus freeing bank balance sheets to support investment and growth, and some countries are trying to do that right now. Third, European countries must continue to pursue structural reform to modernize their economies. We are going to talk a lot about structural reforms in the days to come. This is a motto for the IMF, and it's also a very important target for us in the EU. These reforms should aim at higher productivity and upward convergence. At EU level, a series of concrete proposals have been tabled, notably to develop a capital market union, to further deepen the single market for goods and services, to create a digital single market and to improve the single market in transport and energy. We want to generalize the single market. At national level, labour market policies need to balance flexibility and security considerations. I know a country especially which is trying to do that, while more integrated and competitive product and services market should stimulate innovation and job creation. It is noteworthy that countries that have implemented an ambitious reform agenda are now benefiting from a more marked recovery that also translate into a fall in unemployment. So I would tell people who doubt that reforms are a solution that non-reform are absolutely a pain, and that compared performances of those countries who have already reformed and those who still need to do that are obvious. Responsible, differentiated fiscal policies, relaunching investment and structural reforms are, I would say, Europe's economic priorities, and we must enhance each of these efforts. In parallel, as you know, we are working on improving the institutional architecture of our economic and monetary union to make it more resilient to massive shocks. The crisis showed us too clearly that the euro area did not have sufficient tools to weather such crises, and we have therefore embarked on a process to complete the architecture of EMU. And to me, this is a very, very important challenge. I must say first that significant progress, obviously, has been made in the 5 past years. The institutional foundations of EMU have been strengthened. We have enhanced, as you know, the coordination of fiscal and economic policies through the creation of a sovereign backstop, the European Stability Mechanism, the ESM, which notably plays its role in Greece, and we might have a discussion about Greece later on if you wish, and the setting up of a banking union in the EU. This is absolutely decisive because through supervision mechanisms and through resolution mechanisms, I'm sure that we created the conditions for a much stronger banking system. We are not threatened by the repetition of a crisis such as the 2008 crisis, and we have the tools to address any kind of situations, although the Commission's conviction is that we need to complete this banking union and that we are not yet there. And so this is why we made a proposal on a single deposit insurance scheme, EDIS, which is on the table of the ECOFIN Council. The discussions are ongoing. We are aware that they are not going to be necessarily easy, but we are convinced that they need to be a success. But even with those success, even with those progress, I'm also conscious that the EMU remains incomplete. The gaps in the governance framework cast a shadow over the ongoing recovery, and this also raises questions about the overall stability of our monetary union. So, to me, now is the time to move ahead towards completing the EMU. That is the objective of a roadmap presented by the 5 heads of the 5 EU main institutions. It's called the 5 Presidents' Report, and it was presented last year. Some steps need to be implemented immediately. Others will take more time and further reflection. The immediate steps, which we have already started implementing, encompass initiatives to further improve the coordination of economic policies in the European Union and to enhance democratic dialogue and accountability. In the medium term, this is the most important. Initiatives of a more far-reaching nature will need to be taken. That is called the immediate proposals are phase 1 of deepening EMU, but the most important in my eyes is phase 2. And we must not lose too much time, and we must now enter into the debate on phase 2. These would aim to strengthen economic convergence across member states via more binding standards. More convergence would then open the way for setting up a macroeconomic stabilization mechanism for the euro area. My personal hope, to sum up, is that we would ultimately see the EMU represented by a euro area finance minister who would be directly accountable to the European Parliament, which means that he would be also a member of the Commission. We could think about a mechanism such as the High Representative for Foreign Policy. He or she would rely on a euro area treasury, and we would be responsible for an ambitious euro area budget or fiscal capacity. This is the triangle that we must build in the years to come. I'm conscious that this will not happen in the very near future, that we have political cycles. We are waiting for a very important vote in Great Britain on the 23rd of June, and large countries will have elections next year and the beginning of the year after. Between 17 and 18, we will have new, or the same, but we'll see, there will be new, whatever happens, governments as well in France, in Germany and in Italy and other countries such as Netherlands. But I think it is a legitimate goal for the long to longer term, and that we need to reflect about that immediately. We must not wait for the electoral cycle or for the political cycle to launch the debate on deepening EMU. We must start now because we are, of course, facing very important changes there. Discussions on the long-term initiatives have already started. The European Commission is consulting, is engaging with citizens, social partners, national and European institutions. We plan to establish an expert group by mid-2016 to explore the legal, the economic, and mostly the political preconditions that will inform the more long-term proposals. Based on the public debates and the advice from experts, the Commission will, in spring 2017, set out the concrete steps we believe are needed towards these long-term measures. Let me finish with a few words on the economic impact of the refugee crisis. The last few years have been marked by the highest scale of forced displacement since World War II in Europe. We discussed that this morning with the ambassador. Welcoming 1 million people in Germany is the equivalent of welcoming 5 million people in the United States. Dealing with 1 million people in Greece is the equivalent of dealing with 32 million people in the US. So you must imagine what it represents for Europe. The number of refugees arriving in Europe is certainly small compared to the EU population, but it is unevenly distributed between member states, and we are still a union of member states. It poses a tremendous challenge to the infrastructures, facilities and communities of the most affected transit and destination countries, meaning Greece, Italy, Croatia, Slovenia, Hungary, Germany and Sweden. The European Commission carried out stimulations of the economic impact of the refugee crisis in its 2015 autumn forecast. It was last November. Some of you may be interested in these findings, so let me mention them again briefly. According to these simulations, which are, I must say, be precise, simulations, they are not forecasts. The impact would be small for the EU overall. If we assume an inflow of 3 million persons over 2015 to 17, GDP could increase by 0.2, 0.3% by 2017, depending on the refugees' skill sets. The impact would, however, be more significant for some member states. In Germany, for instance, GDP could increase by 0.4 to 0.6%, while employment would increase by 0.7 to 0.8% by 2017, again, depending on refugees' skill sets, which means also that we must make efforts to integrate those people inside the labour market. With regard to public expenditure, the current information suggests that it is moderate for most member states. Additional effects on the headline budget balance are estimated between 0.1% to 0.3% of GDP in 15 and 16 for most affected transit and destination member states. The level of uncertainty makes it difficult to estimate the budgetary impact, and the costs may eventually turn out higher in some countries. In the longer to medium term, I would say that labour market integration is a key variable to maximize the economic benefits of the refugee crisis. Characteristics of the migrants, as well of the structure, cyclical position, and the integration policies of the destination countries will define the results. If well integrated, refugees can contribute to a greater flexibility in the labour market, to help address demographic challenges, and to improve fiscal sustainability. This is why, of course, being very conscious as a former politician of the emotional context, of the political context, of the political impact of the refugee crisis, being very worried by populism in Europe, so I'm very careful about all that. I'm just saying, as economic commissioner, that this flow of refugees can be, if well addressed, an economic opportunity for our Europe. Dear Adam, ladies and gentlemen, Woody Allen has said that 80% of success is showing up. In Europe, 80% of success is implementing what has been agreed. And let's face it, our record on implementation across the board is not necessarily what it should be. This, to me, partly explains why our recovery has not been more impressive than already. And while this is not something we should rejoice over, it also implies that doing better is, at least to some extent, in our hands. Thank you.
So, Pierre, thank you so much. You covered a huge amount of ground, and forthrightly, and that, whether on implementation or on refugees or on fiscal affairs, and that is a wonderful thing to have a European official, any official, do. So thank you. Before opening it up to the audience for questions, allow me to just pose a couple follow-ups to what you said. I'm not going to push you terribly much on the outlook because, as you said, you will be releasing the Commission's forecast shortly. No reason to go into that. I would like to pick up on your, I think, absolutely right but very clear statement that refugees potentially pose an opportunity, an economic opportunity for Europe. Now, you mentioned the difficulties of the flows relative to the size of Greece or Germany, and it's important for Americans to know that benchmark. Of course, as you're well aware, those flows are tiny compared to what our friends in Turkey or Lebanon or Jordan are facing, and I know you know that. I think the more the issue is what you would call implementation. When we look at, say, our friends in Sweden, who've taken in a lot of migrants in recent years and refugees, they've not had terribly much success in getting them into employment. There's obviously been issues of that in France when you were a French official. Can you give us any reflections on what do you think is the best way forward for getting refugees integrated into the economy and, to the degree possible, employed, which is obviously the path forward for them?
I think the main word here has to be integration, and it relies mostly on skills. We have to know first what these people are trained for, right, and we need to transform their capacities in order to adapt to labor market needs. And I must say that the places where they try to go are the places where they believe they can find a job. And this is why I think we've got a huge effort for first welcoming them in correct conditions. And this is the main challenge. And you spoke about Turkey, Lebanon. We also need to cooperate with third countries, such as Turkey. It is of high importance that the agreements we've passed with Turkey can now be very efficient in order to reduce the flow and to be capable of welcoming, I would say, real refugees. And this is why these agreements have been complex to define, are now complex to implement, but are absolutely decisive for the Union. It's obvious that we also need to have the financial capacity to address the issue of integration and training. And this is why I welcome some reflections that fly in the air, including with common friends of us, like George Soros, about the necessity to create some financial instruments for this challenge, which I believe will be long-lasting. I hope that we won't see every year over 1 to 1.5 million refugees in Europe. And that is also the challenge of the agreements with Turkey. But I think that this crisis will be long-lasting. We're not at the end of it. And so it's a long-term challenge, and we need also to have strong tools for the future.
Thank you very much. Just to follow up on that, although I'm sure the audience will have comments as well, not only our mutual friend George Soros, I think you're aware, our colleague here at Peterson, Jacob Kierkegaard, has offered some interesting proposals on that seem to be getting traction.
I mentioned it because we discussed that with him, but
no.
But others and the European Commission is of course thinking about that.
Yeah. So just I want to follow up on one thing. There is, just as an accident of geography, the fact that Greece does end up fundamentally on the front line in a lot of the refugee efforts, at the same time that, through no accident of geography, we are going through the questions of what's the Greek program. Can you just say some reflections from your seat on how this works, running these issues on separate tracks? Is there any linkage to be done? And what as you said, fiscal capacity is necessary for dealing with this. To what degree is there a European capacity to assist Greece with the flows that they're facing?
These are separate issues, but it is the same country. And so we need to address them separately, but also to be conscious of what it represents for Greece and for Europe. So we must go on negotiating the implementation of the program that has been agreed last summer, but we must also have in mind the tragic context of Greece facing the refugee issues. But it should not be a pretext for anybody to be too relaxed on the last year's agreements. We signed in August a memorandum of understanding. This memorandum of understanding, this MOU, is the roadmap that we must follow. We are negotiating now with the Greek side, and there have been very good progress on the implementation of reforms and the setup of reforms. We made progress on the income tax. We made progress towards the creation of an independent revenue agency. We are making progress on negotiating a strong labor market reform. We are making progress on defining the tools for a strong privatization policy. And these are the requirements of the MOU. We are not yet at the end of the negotiating process. But I must say that it is, working in the right direction, that we saw really positive discussions in the last week. As you know, our mission chiefs were in Athens until Tuesday, and there is a pause, which I hope will be brief, just for discussions that can be taken here
in Washington, where all the main actors are there. And, well, there is no meeting about Greece, but my intuition is that there will be occasions to meet colleagues with whom, well, we could have a word about that. The view of the Commission is that we're really walking in the right direction and that we need to conclude the review as fast as possible. Let's not waste time. Let's not be into tactics. Let's just estimate this negotiation on its own merits. That's our attitude. And we need also in parallel to think about the debt issue, how to alleviate the service of the debt, public debt for Greece. But this is for the next step. And in parallel, of course, we need to redefine our immigration policy, our refugee policy, and to deal with the very delicate situation in Greece. Mm-hmm. So not interlinked, but not absolutely without any relations.
Very good. You mentioned, of course, you are here for the spring IMF World Bank G7, G20, G2000 meetings. I want to go back to where you started your remarks. You quite reasonably talked about the comparisons we all make. It's not just US, Europe, but the various benchmarks. And talk about ask you to say a bit more about some of the issues Europe faces in more of a global context. So, for example, you stressed the issue of lack of investment. And we did our own forecast here on Monday, and as I put it, the U.S. won the least ugly contest. You know, it's not that the U.S. is beautiful, it's just less ugly than others. And one aspect of that is we've had almost no pickup in corporate investment in the U.S. or the U.K. or in the euro area. Do you see do you see this as a global or at least G7-wide problem, or is this idiosyncratic different in the countries? And B, even if it is a global problem, is there anything global cooperation can do about it, or do we all just have to do our reforms homework?
Obviously, it is a global problem because the financial situation of the business is, I would say, globally correct. The capacities to invest exist. The level of interest rates is lower than any time in history. And although investment is still quite weak, which means that firms are hesitant or reluctant to invest because they look at the overall context, the global outflow of the world economy, and they are worried, as we are, about the situation in some emerging countries and also in developed countries. And this is why the message delivered in the G20 in Shanghai 2 months ago was that we need to use all tools available to sustain growth in a more cooperative way, which means monetary policy. Obviously, for Europe at least, it is the case. I'm not going to talk about the Fed's policy. This means fiscal policy. Yes. And I myself talked about the necessity to have now a contribution of fiscal policy which is growth-friendly, but still very serious. We are acting in the framework of rules, the Stability and Growth Pact, and these rules have to be respected. And third, structural reforms, which can enhance the competitiveness of our economies. And for Europe, obviously, there was a need for a special driver for investment. Mm-hmm. And this is why we established the Juncker Plan. That's why we established the FSI. That's why the European Investment Bank is now progressively changing its culture to be more risk-friendly and supportive to, as well, infrastructure projects, big companies projects, but also SMEs initiatives. And these are the fourth pillar of an approach to growth. I imagine that the G20 meeting, which starts tonight, will repeat this message and will be the occasion to confront the situations of the various poles of the world.
Thank you. One last thing, if I could, before turning to our audience. When I was introducing you, I was reminded everyone that while we mostly refer to people in your position and your predecessors as Commissioner for Economic and Financial Affairs, you're Commissioner for Economic and Financial Affairs, Taxation and Customs. So let me just ask a quick question having to do with taxation and customs in a sense. We've had the emergence of the so-called Panama Papers, which has had a great deal of traction in the popular mind in a number of countries. This comes against the background that the OECD and various other international cooperation efforts have been underway about tax coordination on some of these issues. Where do you see this spilling out? And I'm asking you both as your role as commissioner, but also as someone who is a genuine, having been an elected politician. I mean, how much does the popular response to this revelations affect matters for you?
First, I'm not living in the US. I'm living in Europe,
right.
Between Brussels and Paris, my home time. And I saw that there were very few, if none, US names in the Panama Papers.
We have ways of hiding taxes domestically.
Which also means that you have other ways. And I hear a lot about some states in the United States, which I won't mention here because I know
Florida, Delaware, Texas. Anyway, go ahead.
Thank you. But I know them quite well. But in Europe, this created really a shock. If I mention a newspaper that you all know, Le Monde, the French reference newspaper, for a week, there were 8 pages and the front line only about that, and TVs, radios, etc. It is a shock, and I'm certain that it is not ended, that the preoccupation of medias and of citizens for a long time will be pinpointed on those issues. This is a danger. It is a danger because if we don't address these issues, it will benefit to populists. Right. They will say they are all rotten, they are all guilty, they are all together, they are all inactive. And they will look at companies, they will look at individuals, they will look at elites, they will look at political parties, and they will blame us. So this is a danger. If we don't act strong enough, then we will create even more populism in Europe. And as you know, populism is everywhere in Europe. I don't know about the United States. I'm not going to comment about that. Although I tend to follow actively the campaign here. But it is also an opportunity, and a huge opportunity. Because it gives leeway and strength for those who, for quite a long time, and I count myself among them, think that the fight against tax fraud, tax evasion, erosion of tax bases, aggressive tax planning, although it's not the same practices, but still, that this fight is must be a political priority for each of our states, but also for the international community. And it is time now to accelerate this fight, to give a decisive impetus to this fight. Again, as I said, for EMU, a lot has been done in recent years. The Panama Papers go until 2012. I got reasonable expectations that the situation has changed since 2012. In G20 in Los Cabos was launched. It was partly a US initiative and also a European initiative, the BEPS project, and also the automatic exchange of information. With the automatic exchange of information, for example, banking secrecy does not exist anymore in Europe. And the European Union has concluded agreements on automatic exchange of information with Liechtenstein, with Switzerland, with Andorra, with San Marino, and we're going to have one even with Monaco. No loopholes, no banking secrecy in all the European continent now. And also the BEPS project, the BEPS initiative, has become a global standard which was adopted by the G20 in Antalya at the end of 2016. So huge progress, but more needs to be done. And this is why at the EU level, I am proposing as tax commissioners for taxation a three-pillar strategy. The first one is an anti-tax evasion package, which I would say is BEPS plus. BEPS plus what we have to do due to the fact that we have a more integrated internal market. And the principle there is very simple. It's what we call effective taxation. Firms must pay their tax where they create their profits, which is not the case, of course, due to differences in legislations and to aggressive tax planning's strategies. First pillar. The second pillar is now that we need to move on to a blacklist of tax havens at the European level. It does not exist yet. We have national lists, not all countries. For example, Portugal has a list of 85 tax havens, which is quite a lot. We have reasons to believe that there are less than that. But Germany has none, and we have reasons to believe that there are more than that. If I look at Panama, for example, Panama is on 8 national lists, 9 with France, which now has added that to its own national list last week. It was withdrawn in 2011 for France. But obviously, there are practices which are not cooperative in Panama for more than 8 countries. We need to have that common list with common approach, with common methods, with common criteria, and with common sanctions if needed. And I urge the EU member states to adapt this list in the 6 months to come. And there will be meetings here in Washington for the most, I would say, important, for the strongest economically European countries in order to define a common position. That's what we did in 2012 with Spain, with Italy, with Great Britain, with Germany, and with France. We need the 5 of them on board. And we will have the 5 of them on board. And the third pillar is about country-by-country reporting for the activity of multinational companies. On Tuesday, I was in Strasbourg in the European Parliament. The European Commission adopted a proposal directive establishing public country-by-country reporting for the activities of multinationals inside the EU, with also aggregate information for their activities outside the EU, but also detailed demands for their activities in the tax haven or non-cooperative territories. I know that this creates a lot of debate. The first one is to know whether there is a contradiction between transparency and business. I don't believe so. And I tell the business that it's better to be transparent because you are a good citizen, because you're a good taxpayer, because you play the rules, than to play against the rule and to be discovered afterwards. And this is why I'm very strong on this position. And I think this can also become a worldwide discussion, and this is why some of us will put that on the table of the G20 meeting under the Chinese presidency tomorrow morning.
Very good.
I think that there is a new way to address these issues, and that we must go further on. That's what we already did. Sorry to have been long.
No, not at all. I'm very glad to find that there was so much, when I poked you on this, that so much came out. That's actually very hard.
Yeah, but I must say one thing more, is that, you know, the EU is a strange animal. It's a strange animal because the institutions are hard to understand. The Peterson you do, but I'm not sure that any American citizen can, not even any European citizen. The Commission is not the government.
Right.
The Commission is a driving force. It has the monopoly of initiatives. It makes proposals. Then, after, when the proposals become decisions, we implement the decision. So we are as well an administration and a proposing capacity. But the decision process relies mostly in member states. And when I propose this ambitious strategy, I also go to member states and I urge them to get out of their too careful attitude. It is their responsibility to take the right decisions, and they must be conscious that their own citizens, our own citizens, are waiting, and that you cannot, again, be too careful on that. This is why I welcome so much the fact that since last week, some ministers of the most important countries economically, namely the German minister, Wolfgang Schäuble, the French minister, Michel Sapin, and now today all the ministers are now pushing in that direction. I'm not saying that they didn't in the past, but, well, it's always good that they move in the same direction as we do.
Very good. Thank you very much. Let me open up to the floor. We have a traveling mic up front. There's a standing mic at back. Yes, 1 second. The ground rule is please identify yourself when asking a question. Please ask a question. Don't make a speech or I'll have to cut you off. And thank you very much. Please, the lady in the white jacket first and then at the back mic.
Hi, my name is Contessa Bourbon from the New York Times. I'd like to ask, what are the implications if Britain exits from EU, and how would this impact EU?
Thank you. That was the question I didn't want to ask, but I knew someone would, so thank you very much.
I was expecting it too. I don't know why.
Please, sure. Our tradition is you answer directly and then we
take
questions.
So about Brexit, I'm not to comment too much about that because I think that it's up to the British people to decide of their own future, and we don't want to pressure in any ways on the campaign. But obviously, we are favorable, and more than favorable, to Great Britain remaining United Kingdom in United Europe. This is my motto. I think that an agreement was reached by the European Council that is a win-win agreement because it authorizes the British government to say that there will be, I would say, special agreements for Great Britain, but it does not forbid the other countries, and especially the EU countries, which share the euro, to move on into a more integrated project. I believe that politically it would be very bad news, and more than that, if the Leave would win. And I would just make an historical observation. Until now, Europe has always been built by addition. In the beginning, we were 6, then 9, then 10, then 12, then 15, then 24, then 27, then 28. Let's not now work with subtraction because it would open a door, it paved the way to a process which would be negative for Europe. Europe is also history. Europe is symbol. Europe is high politics. Europe is not only about economics and techniques. And this is why I hope so much and want so much the Brexit to be avoided.
If I can just add, generally, I know you're here to listen to the commissioner, but on this issue, as a former Bank of England person, as well as us doing research on it, I have to comment. Speaking as an economist and someone who is not a European citizen, there is no way you can treat Brexit as anything other than economically stupid and self-destructive. Whatever lies the Brexit campaign tells, they're wrong. There is no great burden of red tape out of Brussels that makes Britain uncompetitive. There is no flood of migrants that has hurt Britain. If anything, Britain has benefited enormously from the young people and the people of Europe coming to them in the last few years. That's been their main source of growth. What will happen to the city as a result of this will be disastrous because they will either have to become a ridiculous tax haven of the type that Pierre will have to root out, or they will become a nothing because they will be cut out of so many things. Britain, City of London cannot race to the bottom, win by racing to the bottom on low regulation and being offshore to Europe. And most importantly, it's bad both short and long run. Short run, it's going to create huge volatility as it already has and would take years of uncertainty to resolve. Long run, it is a disintegration thing that will reduce competitive pressures on Europe internally. And at best, they have the same trade relationship with Europe without any voice or seat at the table. So it's a terrible, terrible idea. If the British people, for political reasons, decide it's worth paying all that enormous economic cost, that's their business. but let us not make any mistake about the enormous economic cost this would be. I will also just mention we have visiting with us at the moment Jonathan Portis of National Institute for Economic and Social Research, and a friend of ours think tank in the UK, and he's been publishing a lot of very good factual stuff, particularly on the migration issue. For those of you who care about this, I'd suggest you read some of his work.
I'm not going to comment on that because in the European Commission we are not working on the scenario of Brexit. And my experience as a French politician, we had a referendum in France in 2005 about the constitutional treaty. Is that when you start talking about the plan B, believes you don't believe in your plan A. I've got just one plan, which is United Kingdom in United Europe. But I would say, when I think about that, I don't see any advantage for Brexit. No. Obviously. It's a lose-lose situation.
At the back, Mike, please.
Yeah, thank you. Peter Bachfuss with the International Trade Union Confederation. Just a brief taxation question. Could you fill us in on the current state of or give us a progress report on the 10-country initiative concerning the financial transactions tax? As you may know, some presidential candidates in the U.S. have spoken favorably about the introduction of this kind of tax in the U.S. Thank you.
It's a long story, and I will make it short.
Yes.
For almost a decade, the Commission proposed a financial transaction tax, an FTT, to be created. And in 2012, we had to see, I was there then Finance Minister, that there was no capacity to reach unanimity among the 28 member states to establish such a tax. And you must know that for tax issues, you need to have unanimity to move on, which is so complex, so complex. When you're pushed by public opinion as for fighting against tax evasion, you can do things fast. We did, for example, a directive on automatic exchange of information on tax rulings last year in 7 months, while ordinarily it takes 7 years. So, but on other matters, very difficult. So a few of us then launched what we call a reinforced cooperation, which means that more than 9 member states can propose to have a cooperation between them. We started with Wolfgang Schäuble and myself. We wrote the initiative letter. I was at the time finance minister, and then 11 countries joined. And we are working since the beginning of 2013 on the establishment of a FTT between 11 member states, then 10 because Estonia left. Among the 10 are the 4 strongest economies of the Eurozone: Germany, France, Italy, and Spain, which represents a quite important share of financial markets. In last December, we made, I would say, a principal agreement on what could be the engine of the FTT. And we are working on it, and we are supposed to deliver before the end of June. It's work in progress. I wouldn't bet whether it will be a success or not, but I will say that the Commission is much supportive of such an FTT. But, of course, I can see that there are questions for some so-called small member states who wonder whether the revenue is worthwhile establishing a specific administration among also bigger member states. But I think that politically we cannot move forward. And I hope and expect that there will be a conclusion of these talks, I would say, in June. And the Commission is no more the driving engine because it's not a proposal that we make for the whole EU, but we are present at the table as, I would say, technical and political advisors. And I myself feel personally dedicated to the success of this FTT. Very delicate question. I cannot tell you that we will have it, but I tell you that we can have it and that we are fighting for the creation of this FTT. I think the political commitments of the countries is important, and the fact that the 4 important countries I mentioned are there on the table with others is certainly a good point for establishing it.
Sorry, this is one of those places where the arcana of how the Commission works is not always clear to an American audience. So Could you just give us one more sentence on what it means for 10 or 11 countries to go forward, even though it can't? I mean, so what could be the outcome? What could be affected by these 11 countries?
The outcome is that there would be an FTT between them.
Fine.
Not for the EU. After that, the process would be inclusive,
Right.
which means that other countries could join. And the mid or long-term prospect would still be that there is a FTT for all the 28 member states, that we should show that it works. But first, when there are those 10 member states, they create the FTT, they establish the FTT between them, and the mechanisms work between them.
Thank you for the clarification. Please.
Yes, my name is Nicholas. I have a follow-up question about Greece, and that is, I was very surprised by your optimism when you remarked about the review progress on the review of the memorandum at this point. Indications, coming from observers elsewhere say that, we're in for a train wreck, that there's brinksmanship taking place, that, the Greeks are not looking to really create a stable pension system, that they're not going to adopt some income tax policies that would be worthwhile. Moreover, the business enabling environment is toxic. Many SMEs are saying that they will shut down maybe 60% within the next year if things don't rapidly change. Still high unemployment, and you have a government that's ideologically anti-business. My question is, how firmly will you hold Greeks to upholding their agreement that they made in the memorandum, or are you willing to give them some more slack and maybe let things slide?
The Commission is a political body, but is not involved in politics in the traditional sense that we have in our member states or that you have in the United States. And we are really doing our job as an institution, as experts, and we feel responsible for the implementation of the MOU. As I said, the MOU is our roadmap. And we tend to be objective towards Greece. I'm commissioner since November 2014 now. And we started to work with the Conservative government, and then Mr. Tsipras won the elections. And obviously, for a few months, the impact of this election was wasted time, wasted growth, no reforms. And I'm not mentioning only Mr. Varoufakis, but the overall ideological climate. But I must say, objectively, that things have changed since last July, since the summit, that in a kind of drama, accepted an agreement, since last August and the signature of the MOU, and since last September, elections that confirmed Mr. Tsipras. I'm not in his guts. I'm not in his head. I myself, I'm a social democrat, but I wouldn't be a member of Syriza if I was Greek, and I'm not a member of the equivalent party in my own country. So, okay. Although Mr. Tsipras is moving to, I would say, more social democrat approach or friendship, and he's participating to social democratic meetings, but that's another point. My only concern is, are they reforming? And I must say, objectively, that it was a loss for Greek growth, that I cannot ensure that they are business friendly. But as far as legislation is concerned, and that's what we have to negotiate in the framework of the MOU, there have been very strong progress in the last months. More than in the previous years with other governments, whether they are New Democracy or PASOK. Why? Because, Mr. Tsipras knows that it's the only way to go, that he has no choice. And we know that there is no other way too. And so what I'm saying is not that, we're yet there. We're not yet there. I'm saying that the negotiations move in the right direction if we look at them objectively. What are the criteria? First, are the reforms sufficient? Second, do they create the conditions for fiscal sustainability and to have a primary surplus of 3.5% in 2018? Our estimates, which are also the estimates of the ECB and of the ESM I mentioned before, is that we are not yet there, but we are getting closer to it. And this is why I say, yes, the closing of the review is possible and necessary. But I also know that there are different technical estimates by the IMF. We're discussing with them because we need to find an agreement between all of us. And I must say here, being in Washington, not because I'm in Washington, because I will believe it, that the presence of the IMF is essential for the success of the program. But let's not play tactics about that. Let's not do politics about that. If they accept the necessary reforms, then we must conclude the review and enter into debt talks. And this is the attitude of the Commission. We are not friendly, we're not lenient, we are just trying to do our job, be as objective as possible. As commissioners, I work with conservative governments, with socialist governments, with liberal governments, with coalition governments, and with Syriza governments. And I must say, I don't take into consideration what is the color of the government. There, I would say, a Deng Xiaoping friend. As a commissioner, I don't care whether the cat is black or white, but only if it catches mice. And the mice to catch there is the reforms to achieve.
Very nice, Deng Xiaoping. This will be the last question, please, at the back mic.
Hi, my name is Bruce Zagaris. I'm an attorney here in Washington. And my question relates to your comments on tax transparency and the need for a level playing field and the role of the United States. There's been, especially in the last 6 months, a flood of wealth management structures moving to the U.S. because the U.S. hasn't signed the automatic exchange of information, the common reporting standard that's existed now for 18 months. You also have the issue of, in the Panama Papers, it mentioned that among the 10 jurisdictions doing the most offshore shell companies, Nevada was one of them. And the problem that since, even though the U.S. was found non-compliant in 2006 by FATF with respect to entity transparency, still nothing has been done. And the same with the Gatekeeper Initiative. The U.S. was found non-compliant in 2006, and nothing has been done. So my question is, how can, whether it's the G7, the G20, the OECD, how can any of these initiatives have legitimacy when the biggest financial center does not play by the rules, and none of these informal groups or international organizations can do anything?
That might be less a question of legitimacy than of efficacy. It might be the U.S. that doesn't have legitimacy.
Well, I'm now working the framework of the G20 for 4 years because I was first finance minister for France, and now I'm EU commissioner. And I had the occasion to work with two secretaries for treasuries, with Tim Geithner and now with Jack Lew. And I know that the United States are a very strong force of proposal on that field. As I remember the FATCA initiative, proposals of automatic exchange of information, and in the relevant forums, which are as well OECD and also the G20, because that's where things are being discussed. It's not a G7 issue, not mostly a G7 issue. The United States are a prominent actor. But as I said, for Europe, implementation is always the key for anybody. I'm not going to say more, because we need to, of course, if we define global standards, it is for them to be applied by everybody. But I think that this administration has been very, very strong on fighting tax evasion at the international level. It's very important that the United States, of course, are on board and among the most prominent actors in that field. And that's what I will discuss again with Jack in those meetings here.
We have, if the Commissioner will allow us, 2 more minutes. And
for my old friend.
Right, our distinguished visiting fellow, Fabrizio Sacomani. If you can be quick, Fabrizio.
He's always quick.
Very quick. No, we heard what you said about completing the European Monetary Union and I think that's a very important program. But at the last meeting in December, the European Council apparently said that they want to rediscuss all the more important issues in the future and concentrate only on a few limited subjects. My question is, I understand that there is a debate behind the corridors between what I say call risk mutualization and risk reduction. And the idea is that any further progress in the European construction will have to come after there is a consistent reduction of the risk before we can move towards mutualization of risk. And that applies to a lot of issues like the completion of the banking union. But I think this is the time where we probably would need to have a reform of the European governance precisely to deal with issues like the immigration and terrorism and security and so forth. So to postpone this thing, it doesn't seem to be the right answer in my view. Thank you, Bob.
Well, are we pretending that's a question for Fabrizio?
No, that's what I'm going to say. It's not a question because the answer is in the question, and I share the answer. I think that in some historical circumstances, and we are there, risk sharing is part of risk reduction. And if you look at, for example, the refugee crisis, I remember in 2012, France changed presidency, and President Hollande was elected, and in my party, I was the campaign manager for the president, we proposed Eurobonds. And Eurobonds was an absolute taboo for Germany, and it is still an absolute taboo, and we were told then we need first to reduce risk before sharing the risk. But if we consider what happened since then, and especially the refugee crisis, the need to address this issue for years and years, and the necessity to have resources to address that, and the fact that it concerns not only one state or two states with sovereign debts which are unsustainable, but an issue which is relevant for all of us, now it's time to think about risk sharing. And it's same for governance. And this is why I repeat here that I expect that we make very important steps in the years to come on changing the governance of EMU in order to establish the complete EMU. That was the initial Delors project. You must remember that. That was his own idea. Not an asymmetrical EMU, but a complete EMU. And this is why I repeat my proposals. I want EU fiscal capacity or EU budget. I'm in favor of EU treasury. I think that there should be a finance minister of the EU, also a member of the Commission, which could be responsible to the European Parliament. And the European Parliament obviously should also have to organize itself in order to address those issues. To give a parallel view, today we have meetings of the so-called Eurogroup, the finance ministers of the Eurozone, and then another meeting of the ECOFIN. There could be, I wouldn't say similar, but that kind of organization in the European Parliament. But of course, it's a parliament, it has to decide that, and it is still the European Parliament. But should they have a special committee? I don't know. But I think those issues which are decisive have to be discussed from now, and decided in the very few years to come. And that, risk sharing and risk reduction shouldn't be opposed. They have to be combined, obviously.
Terrific. Thank you very much, Commissioner Moscovici. Please join me in thanking you.